the economic calendar as usual. We'll start with today's Thursday, the 18th of November. And we can see that there's some reports at 9:30, particularly that will be affecting the pound dollar. Reports of medium importance, which will be coming out at 9:30. There are quite a few of them, retail sales, public sector borrowing, and public finances. So they're all coming out at 9:30, so that could have an impact on especially the pound dollar. That's a Swiss report if you're trading the Swiss franc. That's a Canadian report if you're trading the Canadian dollar. And then of course at 3 o'clock you have the Philadelphia report, which again is of medium importance, and that could have an impact on the markets. But there are no reports of high importance. So we'll just go ahead and place our trades as normal. But obviously you have to be aware that 9:30 and 3 o'clock there could be changes in the markets. Okay, so we'll start with the pound dollar. And as we can see, initially the pound dollar was trending up, then it started to fall, went sideways, started going back up in a haphazard fashion. And you can see where it broke the moving average 50, where you could have sold, that's from a swing trading point of view, and it's now rallying back up. And then we'll see what happens. In terms of today, clear swing trading opportunities today would either be the Fibonacci retracement, the 38.2%, or the 23.6%. Obviously, if there's a huge rally up, well clear away from the Fibonacci retracement, then you can buy, you can sell again when the market is about to fall using the moving average 50. But with the market close to the moving average 50, it's best not to use the moving average 50 at this point in time. So that's the pound dollar. Let's go to the from a swing trading point of from a day trading point of view. We can see that the market is trending sideways. So there are just huge swings in the market. And obviously there's that report coming out at 9:30. So obviously the safest place to place your trades will be just above the first resistance at 15,962 and just below the first support at 13,864. Of course, things could change at 9:30. So obviously, if you find that at 9:30 the market is still about the same point, you could then use the pivot point to sell at 9:30 when those reports come out from Great Britain. But from now, I think the best place to place your trades would be the first support and the first resistance. And then at 9:30, depending on where the market is, you could change your sell point to just below the pivot point. So that's for the pound dollar. And then for the euro US dollar, again, we can see that the market initially was going up, went from the 38.2% retracement up to the 23.6% retracement, and then came crashing down, broke the moving average 50 there, fell, rallied back up, made a new high there, and fell back down, made a new low. So it's making a lower low, and it's rallying back up again. Obviously, again, from a swing trading point of view, you could have sold there when the market broke the moving average 50, but at this point, where the market is now, the only clear swing trading opportunities would be to use the the Fibonacci retracements at the 23.6 to buy if it goes back up, or the 38.2% to sell. Now let's go down to day trading. So from a day trading point of view, we could potentially have bought at the first resistance, but as you can see, the market has gone past that, and it's sort of trending sideways around the first resistance. So unfortunately, at this point in time, there are no clear buy opportunities at the first resistance. Obviously, if you got up early in the morning and you placed the buy order just above the first resistance, then that's fine. That's a perfectly good trade to make. So you could have bought just above the first resistance if you've been up early. Obviously, if you're not in the trade now, or you haven't placed any trade now, there's not much you can do now. The market is just going sideways around the first resistance, so you just have to wait. The only clear trade to place now will be just below the pivot point at 13,524. You can see where the market went up and started to go sideways. So this is currently the low point of the sideways trend, 13,576. But like I said, from a sell point of view, that'll be a safe place to sell for the meantime. You can see that there isn't a clear pattern to the trend yet. So from a sell point of view, we're best to either to sell below that point and then just wait and see what happens. So far, there isn't much of an opportunity in the market. But the good thing is that there are no reports of high importance. So just waiting for the market to see what the market does, but sticking to your own trading plan and waiting till your signals come about. Because at this point in time, our plan was to buy above the first resistance. The market is currently above that, so there's not much you can do. It's gone past your point of entry, so you just have to wait. If the market falls back down, and then yes, you can then think about placing a buy order just above the first resistance. But at this point in time, you just have to wait. From a sell point of view, because of this pattern in the market, I'll be reluctant to use the moving average 50, and rather just put my sell order just below the pivot point and then wait and see what happens with this